if you are now offering your customers, your mass affluent customers, or even just your mass banking customers, that kind of personalized assistant that is, traditionally the kind of white glove service, if you're now able to offer that service to mass banking customers through an AI agent, if you get to market first, like, I think you're going to get a big shift of people wanting to take up that service.
Hello, everyone, and welcome to another episode of Deep Learning with PolyAI. Today, I have Nathan Pearson, our GM of Financial Services, on the podcast. Nathan, welcome.
Thank you very much. I'm very excited to be here.
Likewise, and I'm excited about this episode. I think in the history of this podcast, the most kind of surprisingly high-performing series of episodes was Oisin Glynn, our head of solutions consulting, and I talking about the history of telephony. So as we thought of topics, I thought that one that would be really interesting to cover with you is the history of banks kind of like trying to both make their experience better and remove humans from the loop, cut costs by using technology and removing, humans from the operation. So, you having deployed conversational AI on behalf of very large global institutions, I thought that would be a great idea to kind of like move us just back through history to like where it all started. So what's the first place that like a bank ever really tried to use technology to get that leverage or improve experience?
Yeah, so firstly, big shoes to fill in, meeting Oisin's expectations. But the first actual really mass implementation of like technology to transform experiences was the humble ATM. You might not think about it now, but that really did like change banking. Before that, everyone had to, go into a branch, like queue up, talk to a teller just to get access to your money, to check your balance, do all those good things. And the ATM actually provided the automation that you could, walk up to a machine. I think it was put in a check back in those days to get access to your money. But that was the early 60s, mid 60s. So what's that, 60 years ago? That's a long time. And banks and experiences have changed a lot since then.
Yeah. So like, did those first ATMs even have like cards associated with them, or did it work in a different way?
No, I think it was like a check. I think it's one of these like technological horse races, a bit like, VHS versus Betamax, and like different modalities were created and in different parts of the world. So I think the very first one was here in the UK in North London, at Barclays Bank. Congratulations, Barclays. It was the first one to launch, but I think that was quickly followed by, banks in the US, in Asia, doing similar things with different technologies. And I think it was a few years before the PIN number emerged, before the actual card emerged. But yeah, so there were quite a few different varieties back in those days.
That is so interesting. Yeah. I mean, as you were talking, I checked, and yeah, 1967 in Enfield, Barclays. And I guess what's really interesting is they automated cash withdrawal before they had these like full digital identities for customers. And kind of like with any form of self-service, there were concerns about security, in this case, physical, where someone can jump you. And I think kind of like how people don't yet maybe accept that they'll be doing everything with AI agents. Similarly, I think it was quite an ask of the customer base to like not be in the safety of a branch getting money, but instead kind of like do it in the middle of the street, right?
Yeah, definitely a big shift. But I think it shows that customers value convenience. They value the ability to, get access, do the basic transactions quickly and easily, and that you don't need, it really did start to prove the hypothesis that we've seen, really evolve, that you don't need a human member of staff to do everything for you. A customer is competent at doing some of these things themselves.
Yeah. So I guess the overhead there is, or like the benefit of that first level was you didn't have to wait in line at a bank physically. You still had to go to the bank because they were associated, firstly, I think, with branches. Then later they kind of like started showing up everywhere and offering you the convenience of, having to travel less. So I guess that's a benefit. What came next in terms of like self-service journeys?
Yeah, well, I think actually the next big shift is not necessarily self-service in the traditional sense, but it's telephone banking. And that really broke the thing there. You just talked about how, a customer still had to go to a branch to go to an ATM. The telephone banking actually meant you didn't need to leave the comfort of your home or your workplace. and you could just call the bank to do basic banking transactions. So that first launched in the UK, at least, with First Direct in the late 80s. And that was, revolutionary at the time. This whole idea that, banking wasn't just about branch, physical, in the location of the banking organization. You could do your banking from anywhere, and therefore you could put banking staff in other places as well. They didn't need to be on the high street. They could be in these vast aircraft hangars that have become, contact centers we know today. But those early telephone banking days, there was no automation. It was actually, human to human, quick response, but it's built that trust because you can't physically see them, but answering the phone, you're talking to another human being. They've got all the access to, your banking services, your systems, etc., etc. So that was, I think, the next big shift. The ATM was that you don't need a human from a member from the bank to do the service for you. Then the contact center or the telephone banking was that shift that you don't need to go to the physical location. So we're starting to see this shift in actually what those experiences look like.
No, absolutely. And, my late father, like till the end of his life, would call his bank to check kind of like the amount of his account, whether his pension arrived, whether the payments were taken. And he was by no stretch of imagination a technical Luddite. He was on YouTube, watching conspiracy theories and just like consuming all sorts of technology voraciously while still kind of like wanting to call and have that. I guess it's a personal relationship, but then again, I guess it's not that personal because it is a streamlined thing with a contact center with a lot of people. I guess post that and evolving, it comes the dreaded IVR, right?
Yeah, exactly. So IVR was next. That was bringing the best. I don't know if what best is the right word, but it was bringing automation plus remote interaction into a single place. And so that really landed in the early 90s. Interestingly, just back to the previous example, First Direct is the one bank that still very proudly does not have an IVR. They were strong believers that human relationships should exist. Whether we agree with that or not is a different matter. But every other bank in the world pretty much now has those dreaded IVRs, and it obviously started with the the worst of the worst with the the DTMF touch tone, the press 1 for banking, press 2 for cards, etc., etc. Customers pretty universally hated them, but banks pretty universally loved them because automation, deflection, cost reduction, containment, all those those classic words you associate with automation initiatives. That's what they gave you.
Yeah, no, I mean, absolutely. And if you think about it, I know of many a large bank, and the stats from those things can be like 70% containment, where if your customer base has no choice but to learn how to use these things and you keep it on for a decade, well, like it becomes quite functional. And then, as you evolve the interface to a more conversational one, it's not always easy to match those numbers right from the get-go, especially if in the newer instance, you stop insisting on there being no way out of the self-service labyrinth, right? I guess what's also interesting about those applications, especially, well, whether they're voice-driven or DTMF, is that it is an application, right? So kind of like as we think of the next step, which I guess would be mobile banking. Well, internet banking, I think LA Bank was a pioneer in the early 2000s of this kind of like, web interface where your banking would live. With that, I guess it starts being an application. But even before that, after you open an account, you could do a lot of the basic banking over the phone, even though we still didn't have smartphones or maybe even internet, right?
Definitely. And I mean, I think even before like in proper internet banking, I think there were some services that were sending out banking applications on like floppy disks or CD-ROMs for people to do stuff on the computer before we went fully digital. So there've been there were a lot of experiments. Like I think banking has always wanted to experiment with elements of automation, of leveraging the latest, greatest technology. Just hasn't always landed that well. But yeah, I mean, internet banking became, very popular in the probably early 2000s, I guess, when it started to become the norm. And then the 2010s is when mobile banking became the norm. And I think mobile banking is when customers have really adopted, that digital self-service. The fact that you've got, a mobile phone in your pocket with all the key services available 24/7, you don't need to boot up your laptop and do all the kind of login activity. It was, mobile with Face ID and Touch ID and everything that really made that kind of always on banking experience available. But, really with a drive to self-service, if you think about these web pages, mobile app designs, a lot of them are just like replicating the forms the paper forms that once existed in a branch you would walk into and a member of staff would fill in all that information. They just put that on a digital application and made the customer do it themselves on the customer's own time, which is actually from an efficiency perspective, like, a genius thing to do because, therefore you don't need a member of staff to do all that kind of stuff. It just build some IT application that processes all of that, do some straight through processing, and the customer is working for the bank at that point, which is pretty good.
This is where I think like you have to be somewhat nuanced. I've always struggled to kind of go like, hey, voice is the best interface or not, like even though always been voice first, but not for everyone, right? I think that the alternative to like filling out that form that's going to have to be filled out is that, you get white gloved into a chit chat that takes twice as long and someone's filling it in for you and you're standing there in the bank and maybe you didn't want to go there to begin with, or maybe it's over the phone, but still, maybe you're on a train going through a tunnel, the line cuts, you call again, you can't find the same person. So like, I feel like for younger generations, they might just want to punch through the form themselves. Whereas like someone older might be quite offended if they're forced to do it themselves rather than having someone take the time. So, I mean, that's really interesting. And that whole like equation between like pushing work out and, there are groups that will see that as functionality that they really want versus groups that get aggravated by the fact that they're asked to do it on their own. And, especially when it comes to the channel mix for customer service, especially for banks that then become, mobile first, but also like web banking available in case you're there. Maybe you have a branch, maybe you don't. Increasingly fewer branches, I think, for even the largest banks, and that, the need is less prevalent. And then you look at all that and you're like, okay, there are banks like Revolut that have told me explicitly that they will never have a voice channel because that's for like, no one wants that. And I don't think that's right either, right? For even like just the youngest of demographics, because optionality is always better. Although there is research that says that having fewer CX channels tends to mean that you have better CSAT because, you focus on doing those channels better is, I think, the truth. And you can't really know whether you'd have more of these or those customers if you invested in the other channels. When you've seen these automation initiatives before, and, the one big push from live person onwards has been to automate and chat and deal with automation there because it always worked better. What's your experience been with kind of like driving self-service through chat and then leaving phone as the non-automated channel? Because I think it is largely unautomated. We work with a few banks where we managed to go all the way through to complicated tasks, but it's an effort. And I dare say 90% of banks in North America and Europe do not have robust voice automation yet.
Yeah, no, completely agree. And I mean, I spent a long portion of my time in previous organizations, driving that chat adoption as part of, broader digital transformation programs. And the reality is what you've said, right? That chat is much easier to automate. You don't have to worry about the complexities of voice, of speech recognition, of transcription, of so on and so forth. It was just like super, super hard to do before the latest wave of technological change. So chat was the obvious thing to do. It's it's keeping customers within digital. Everyone loves WhatsApp. It's an easy story to sell. And you see really high customer adoption in most markets, like across Europe, across the Middle East, across North America, kind of everywhere it has happened at kind of a similar pace. I think the reality, though, in addition to that uptake, is you have not seen customer calls come down to net that off. So you've seen a shift in the channel mix if you just look at percentages, but that has resulted in like massive increase in chat and a small decrease in voice as customers just start to self-serve. So you've not really seen that substitution. You've just seen a growth in the one channel and a small decline in the other.
So, I mean, yeah, I think that's like, it happened with, I think, kind of with petrol, like Jevons paradox, where if you have more of a resource and then it gets cheaper, then you don't really decrease the overall spend on it. You just use more of it and people get like 2-3 cars and drive around more and more and consume more of it until that equilibrium is reached again. I think equally like a lot of these interfaces have become more complicated. You can do some things with most banks, you can do some things with online banking, other things with mobile. It's complicated, you get confused, so you end up calling more and you need more support. So even though chat absorbs a lot of it, you still need more, right? So that kind of like human resource ends up still being used quite heavily. When it comes to like large banks and the kind of like big successful initiatives, I mean, in terms of well-branded efforts, I think Erica from Bank of America is probably the most prominent one, with spend estimated at least 50 million, maybe higher than that. Higher? Okay. Okay. Like, I mean, they've also branded it as their persona and stuff, so it's interesting. But do you feel like, how would you assess the general state of play among like Western banks in that self-service? And where do you think agentic AI is going to take it over the next few years?
I think most banks are on kind of a pretty similar footing, to be honest. I think mobile app has been the major focus for everyone universally. That's the story that all the consultancies have been selling. That's where most resources have been allocated in terms of transformation initiatives, I would say, across the globe in terms of financial services. Everyone built chatbots, 5 to 10 years ago using deterministic models. All of those chatbots, average to poor, I would say, in general, in terms of customer language, in terms of the usability. The reality is that's not down to, bad implementation, bad design. It's generally just down to the limitations of the technology that was available at the time and the complexity of big legacy banks with big legacy systems integrating all their APIs and backend systems into them. So, a lot of them will be FAQ driven with a small amount of fully, fulfillment, self-service use cases. I would say, some banks have gone bigger in terms of the persona and the kind of the PR around it. I think Bank of America have done a fantastic job there. I think Wells Fargo have tried to kind of echo a lot of that with theirs, Fargo. But it's still generally chat first and still generally deterministic. I think where we are, now in early 2026, then we'll start to see that shift. A lot of the conversations we've had with banks has been, we're not ready for generative AI with customers yet. We will be, but not yet. Like, let's do staff facing things. Let's do pilots. Let's test everything out, and then we'll do it. We've got regulators. We've got all those concerns. I think the conversations over the last few months are really shifting, and I think it's now conversation is not we can't do this, it's we want to do this, how do we do it safely? And I think that the shift we're seeing, that's the risk appetite shifting within these organizations. ChatGPT has been around for 3 years now. People understand it better, the risk and regulatory teams understand it better. So I think that's where we're going to see a shift in the appetite and the desire. And I think this will be a big year in that shift.
When you look at just the interest and like the adoption among the customer base, I think that a few years in now, there's a real kind of like taste for a persona behind like that interface and an understanding of what it sometimes does badly or not. Again, like I think it's still evolving. I think just leaving it there in that shape and form without the human handoff is going to be the real kind of like holy grail. I don't think we're close to that at all. But equally, we have a few banks already that have deployed fully LLM-powered systems. Now, again, what agentic means and, fulfillment and tasks being done, absolutely, as far as the integration kind of like landscape allows in a given organization. But what about personalization? Like, how important is that for, like, let's say even just a chat experience being automated?
Hyper-personalization has been one of those buzzwords that's been bandied around for, I don't know, 5 years, 10 years, I lose track. And it's never been delivered. I don't think, again, you see little elements of, I don't know, you got a personalized push notification based on the offers that are available on your account versus me, but it's not personalized to you, Nikola. It's personalized generally to someone of your demographic, someone of your, like, product holdings, whatever else. Right? This, I think, is the big opportunity, like, for a institution to like differentiate themselves from the competition.
What would the real use case of like hyper personalization be?
I think it's that proactive like nudging in terms of your behaviors. Like, obviously there's like always a fine line between sort of like creepy and useful when it comes to personalization, but there's simple things that have been talked about for years and years. No one does it. Maybe Revolut do. I'm not a customer. But the stuff like, you land in Dubai on holiday and you get a notification saying, "Hey, Nicholas, see you in Dubai. Did you know this is the local FX rate? Actually, if you use this card, you pay no FX fees while you're here." Just those little things that are saying, "Hey, you're here. This is the thing that's going to help you." Or, "Hey, you've actually got some excess money in your current account. We know based on your bills, you can transfer some money across to your savings, you get a higher interest rate. Those kind of sort of behavioral things that everyone knows they should do, but it requires a bit of like cognitive load to do that. I think being able to do that, being able to, go in, start some conversations, the thing when it comes to calls is generally a customer who calls in who's actually been doing something digitally beforehand. They've seen something, they've seen a fraud they've seen a transaction they don't recognize, they think it's fraudulent, they call in. And then you call up, you go through a IVR tree, you land with the fraud team, and they say, "Hi, why are you calling today?" And really, you should just be able to say, "Hey, Nicola, I see you've been looking at that transaction on your account. Is that something you don't recognize? Can I give you a bit more information about the transaction?"
Yeah.
Those are the things where it's just like contextual, it's helpful. It just sort of like takes away some of the time of a conversation, but it also just takes away some of the emotion because it's like, oh shit, they actually know me. They know what I'm looking for. They know what I'm doing.
Oh yeah, I mean, like, even if you just think of probably like one of the more frustrating call types for a bank or for a customer of a bank is you're abroad and voila, your card is blocked. Right. So it's like, hey, call us about it. And then you call and you're like, call a number. And it's like rarely done in 10 seconds. And really it should be. And that's just like a point where you become a very high churn risk, or at least like less likely. And very few people now, I think, have accounts with only one bank, especially with like the challenger banks and regular banks, and then you remortgage and you open an account with another bank. Now you've got real optionality that I think maybe wasn't as common as, I don't know, 10 years ago, 20 years ago. And especially for a lot of these challenger banks, we've worked with a number of them, and it's, you grow a customer, you wait for them to start earning some respectable money. And I remember a bank CIO told me very early on in PolyAI's history, kind of like very proudly, it was the CIO of a challenger bank, and I compared them to another one. I won't name them here. And he was very proud that their average customer is 5 years older than the other bank's customer, because that means quite a lot for like the value of that account holder in terms of their spend, propensity to get a mortgage, and things that actually make those banks a lot of money. And when you nurture them for that long, and if early on all they're doing is spending money at the pub, paying for their rent, and they don't have a mortgage, they don't have school fees or anything like that, that is kind of like a bigger kind of like mental burden, things are great and that app works. And then something happens, they have a large money transfer and it's blocked for some reason and they can't reach anyone. Like, you just see a sudden spike of kind of like people churning to older school banks because they know that maybe their mother, father had a Lloyd's account, a Barclays account, where they just kind of like believe that brick and mortar. They've seen that blue logo or the like black horse on the high street forever, and it's like, yeah, like, okay, like that'll be there, right? Although I guess 2008 taught us that doesn't always have to be the case with all banks, but for the most part, it's held. Do you think like there is? I mean, Revolut is obviously like a company worth 75 billion now, but where do you think like we converge, say in the UK, in terms of banking in 10 years from now?
It's a fascinating question because these challenger banks have been around for what, 10, 15 years, some of them now, and they were always the great promise of they're going to destroy and really disrupt traditional banking, and it's happened around the edges, right? People put open current accounts with Monzo. They do. Some people take loans from Starling, but generally you don't have these big banking relationships. I think because people like the trust, safety, whatever of the big banks, and the big banks have largely built apps that mimic the challenger bank apps. They all look relatively similar with different color schemes and slightly different designs, right? Whether you're a neobank or a big bank these days. So the disruption there hasn't happened. I think this is where the whole like agentic layer can completely shift it. If you are now offering your customers, your mass affluent customers, or even just your mass banking customers, that kind of personalized assistant that is, traditionally the kind of white glove service that a private banking customer only gets, where you've got a relationship manager who's calling you, who's proactively doing stuff, who's managing your money for you, etc. If you're now able to offer that service to mass banking customers through an AI agent, if you get to market first, like, I think you're going to get a big shift of people wanting to take up that service. And they might only start testing it to begin with. They might not throw all their wealth at it and all their investments, but I think eventually, like being a first mover in this market, I think actually can be something that is, you know, truly transformational within the opportunity.
Yeah, and I guess with the context layer of knowing and having interface, I guess open banking already paved the way for a lot of things that you would need from MCP to do some of this. So I guess the question is just like who will move first? What's the most exciting thing you've seen recently?
I mean, a few banks have done like things like being able to interrogate your finances using an agent, you know, asking, you know, basic things like, you know, how much money did I spend at Amazon last week, or those kind of things I think are quite nice. But I think, you know, generally speaking, there's been that big like aha moment yet. I think everyone is playing around the edges at the moment just because of that risk and the concern with using, you know, large language models and in a customer facing environment with a regulatory burden over the top. It's not quite there yet, but I think it's going to happen soon. It's suddenly going to happen. Someone's going to do it. There'll be precedent, and then everyone will be diving straight in.
Yeah, no, absolutely. Well, look, Nathan, thank you for joining me and talking about, you know, banking self-service and the history of the field. Now let's hope that we can do some really exciting stuff to write a chapter in it over the next few years.
Definitely, and thank you for having me.
Thank you all for listening. Please like, share, subscribe, and we'll see you in the next one.